Mahesh Nindulkar, Executive Director at CLSA, joins us from Hong Kong from the sidelines of the CLSA Asia Conference. Mahesh, fantastic to have you back. Thank you for joining us. What is your sense from meeting with investors? Do you think India is back in flavor, or there's still too much of pessimism in and around Indian equities?
My interaction with the investors here at our conference reveals that the interest clearly exists in India, but it's not that there is kind of a euphoria about the country, about the valuations, etc. The reason for that is most of the investors are a little worried about the direction of the rupee. While the currency has appreciated, but it has been quite volatile, and the markets have also been volatile. So international investors are essentially looking for more stability in both the rupee as well as some stability in the markets. So it's the volatility which is really creating some issues for foreign investors about investing in India at this point in time.
Mahesh, hi, morning. Are investors and you worried with recent tightening approach adopted by the Reserve Bank, and do you expect growth to be the collateral damage then?
I think the Reserve Bank of India has done the wise thing. On an overall basis, they have actually ended up reducing the cost of borrowing for the banking system, because while on one hand they have raised the repo rate by 25 basis points, they have also reduced the MSF by 75 basis points. So on a weighted average basis, it reduces cost of funds for the system. But clearly, the increase in the repo rate was not really anticipated, and the market has reacted negatively, for that. But I personally believe that it's the right thing to do what the RBI has done. Clearly, there was a space created by the actions of the Fed, where they kind of decided to postpone the proposed tapering, and the Reserve Bank of India has done well to take advantage of that space and tighten the rates here in India. The outlook on the growth is subdued, not just because of what the RBI has done, but also because of the other economic parameters and the fact that the government will need to reduce its spending level to meet the fiscal deficit target, and also we have been seeing higher rates in general. So the outlook on growth remains weak. Don't think it's necessarily worsened because of the recent steps by the RBI.
Mahesh, the government is trying to push stalled infra projects. Do you expect revival in the capex cycle soon, or the capex cycle will only revive after 2014 elections?
Yeah, the Cabinet Committee on Investment is really trying to speed up the stalled projects or revive the new project activity. And I think while it's a step in the right direction, I don't think we are going to have any immediate positive impact of those steps. I think it's clearly going to take at least 6 to 12 months, in my view, before we see the improvement in the capex cycle or the overall investment activity.